Folks, welcome to the Contrarian Trader and to the member stock pick request video. I do this video as a service to our members. It's free of charge to them. Members submit stock symbols that they're interested in, and I'll review the charts for them, give them my opinions on it. And it seems to be a very, very popular service, and I'm really proud to do it. And our first stock up is JCPenney. And we all know the story here. This is a company that's in deep trouble. Now, that being said, trouble provides opportunity. As a contrarian, I look for opportunities in the ashes. And this stock has got a lot of ashes. It's really been burned to the ground. So we bottomed out in early February at $4.90, and we've had a little bit of a rally up to $6.20 before pulling back. Now we are at support at $5.50. Draw your trend line. If we spend another day consolidating against this uptrend line, it may be worth the risk of getting involved with the stock as long as you keep a stop loss just below the $5.50 level. I just may make this trade myself, and on any of these stocks, that if I decide to make a trade on it, I will send out alerts to members. So a stop loss should be put in just below the lower band of this rising uptrend channel on a closing basis. What does that mean? If the stock closes below this lower band, it can retest it. You don't want to stop out too short because it may just bounce back later in the day. So keep your stop loss a little bit fluid on it, and I would be an adder to that position on a close above $6.20. Lots of shorts in this stock looking to get squeezed, and that may just happen. Next stock up is for fellow member Barry. This is Golden Star Resources. This is an Amex stock that saw some topping action at 84 cents. It saw resistance back there in August, and it also was resistance back in May. So, natural resistance, no big shock. It pulled back to support at, say, 76 cents per share. If I was long of this stock, I wouldn't sell it. I think Friday's price action was fairly bearish, and I would just use a stop loss just below, say, 74 cents per share. If you really wanted to be conservative, or allow it to pull back to this lower band of the rising uptrend channel and see if it holds. At that point in time, you could add more. This is very, very good support. I like the uptrend on the slow Stokes, and we may hook back up. Possible double bottom on your RSI. The down volume on Friday was not that bad, so this just tells me that it was a light volume down day, not many buyers out there, so the sellers really dominated the day. I'm not really all that concerned about the candlestick, even though it's ugly. We did have a little bit of a bottoming tail form. I think it's okay to hold. I would not be a buyer of it right now. I would rather wait for a pullback to this lower band or a breakout and a close above 85 cents. Next stock up is Amyris, AMRS. We had a breakout on the RSI. We're seeing some resistance up here at, say, $3.89. I wouldn't be a buyer of this stock until we got a pull back to $3.29 or a closing breakout above this declining downtrend line. Volume on Friday was dropped down below Wednesday's selling pressure. Here, this is in an interesting Stoke RSI. You're making lower highs. That's never good. So what you're going to want to see is a double bottom setup on the Stoke RSI. If we break down below this level, I would really wait for that pullback to $3.29. We're rolling over on the slow Stokes. Possible failure on the MACD. And we're breaking down on Williams percentage R. This is really one that I would stand by and just watch right now. I certainly would not buy it on Monday morning. Okay, next stock up is NETE. NetElement International. You know, I didn't even draw any trend lines on here because when I looked at the chart, it just said sell. Honestly, you have a huge topping tail, resistance of $4.31, and then you had a inside day on Friday, long red candlestick. I would not be a buyer of this stock. Maybe on a pullback to $3.15. Nice double bottom setup. And then if it rallied up to close above $4.31, I might think about buying it. But you have a lot of overhead supply up here. A lot of people looking to get made whole. So I would not buy this until it pulled back to $3.15. And you got to keep in mind the psychology. These people have been holding for months now, and all they want is their money back. They're not looking to make a profit. They just want out. Look at this ride that they went down to. Buyers up at $6.56, held down here to $2.12. Yikes. You know what I mean? They just want to get made whole. So my natural instinct is to say avoid it. Wait for a pullback, $3.15, jump back in. RSI is rolling over. Volume is above average to the downside. We're rolling over on Ultimate Oscillator. And this is one of those stocks that can make me look foolish and just spike higher on Monday because it's such a high beta stock. But I have to call it as I see it as of the close Friday, and this is not one that I would want to buy right now. Next stock up is for Christine, MSTX, Mast Therapeutics. It had a nice breakout a couple of weeks ago. This is a weekly chart. And we are now pulling back. We're breaking down below these bottoming tails. That's not a good sign. Volume is fairly high. I mean, it's meeting the average, if not exceeding the weekly average of volume to the downside. So I think that the path of least resistance right now, let's check out a daily chart, is to the downside. So Christine, I think this is a stock that's breaking down at a nice rally. I would not be a buyer of MSTX right now. You have little, if I was looking for a glimmer of hope, it's support right here at 70 cents per share. We had this bottoming tail on Friday, and you had some bottoming action in that neighborhood back in January. Where I would think that if I wanted to be a speculative long on this name, it would probably be to open a position at the 50-day moving average if and when we get there. And I'm not going to be a bit surprised to see us get there. The bull story from a macro view is that we had a nice breakout here. I don't know what this company does or what the fundamentals are, but the chart is not all that bad. You have the 50-day moving average, which recently crossed above the 200-day moving average. So from a macro picture, it's looking okay. I don't like the fact it's breaking back down into this base. So if you're looking to buy this one, Christine, I wouldn't do it. I wouldn't do it until I got a pullback to the 50-day moving average. Be really conservative, and that just happens to be where the bottom of this January 15th low was as well. So you may see some buyers come in at that level. Down volume continues to rise on a daily basis. And your Stokes are still in a downtrend. Next stock up is RFMD for fellow member Fernando. As a matter of fact, I skipped the one on Christine. I'll come back to it. CBMX. Christine, don't shut down yet. I'm going to come back to you in a second. Let's just get through RFMD first. NMU, which is Fernando's submissions. RFMD, weekly chart, looks really, really good. This is a daily chart. I went over this one last week. We didn't get the follow-through past this resistance level, which would be my buy trigger. It didn't close above, and this is why I always say on a closing basis. It traded above this resistance level intraday and then backed off. This is why I do not like to buy stocks intraday. I buy them near the close. So RFMD, bearish day on Friday on light volume. I don't like this candlestick. My guess is that after this big run up, we're going to get a pullback. Possibly down to $5.70. Then I would look at $5.50 as my two support levels. So RFMD, I would not be a buyer of right now. I'd watch to see where this one settles out. Stokes are rolling over. MACD histogram declining. And the semis, remember the semis were weak last week. Just keep in mind that the index flashed two key reversals, bearish key reversals last week on Wednesday and then Friday. So the next stock up I'm going to discuss is Micron Technology. This is Fernando's second request. This one happens to be a darling right now. I'm really surprised. It hasn't been a darling for quite some time. But it did hold support. They tried to sell it off on Friday. Buyers came in and held support. I would be a buyer on a retest of support on a closing basis or a buyer on a breakout above 25.68. Micron is looking pretty good. Nice little double bottom setup here at the 50 level on the ultimate oscillator. Just keep an eye on these MACD histograms losing momentum. All right, so although I see some positives on Micron, keep one thing in mind. This time last week, it was trading at this level, and this is when I last looked at it. It rallied and it broke back down. It really couldn't hold these gains. I'm going to need to see a breakout above 25.68 before I got really bullish on it. You can nibble on it here, but just keep a stop loss or just below Friday's lows of 24.54 and then get out. Christine, let's go back to you. Okay, CBMX. This is what I discussed last week. Not much has changed, really. We had a bearish key reversal last week, weekly chart. I think that there's a high probability that we're going to come back down and test the lower band of the rising uptrend channel. That's where you can begin to nibble on this, Christine. And then I would look to add on a breakout above the upper band of the declining downtrend channel. This is a very, very volatile stock. So try to avoid the daily chart. There's a lot of noise on that chart. Try to stick with the weekly chart. Save this one. Note the Williams percentage R is rolling over. So I think we're going to see lower lows on CBMX, but with that brings opportunity to buy it down here at this lower band of the rising uptrend channel. We're rolling over on the Stokes as well. Lower highs on the slow Stokes. I draw your trend line down. Okay, next stock up is for fellow member Jason, symbol SNDK. Everybody knows this stock, Sandisk. All right, Jason, the first thing that jumps out at me when I take a look at this chart, daily chart, we are in a strong uptrend, no doubt about it. However, we're trading far too close to the upper band of the rising uptrend channel. So the money was made on the buyback here at the lower band. So it being so close to this upper band, there's really very little reward to take for a lot of risk. So I wouldn't be a buyer of this stock. In fact, if it hit the upper band of this rising uptrend channel and the market begins to fall apart, keep an eye on the semiconductor sector specifically, keep an eye on the NASDAQ comp, keep an eye on the technology iShares, because if they all weaken up, you could be a short seller of SNDK if it hits the upper band of this rising uptrend channel and just begin scaling out as you start breaking down below support levels, and you should be out of that trade once you hit the lower band of the rising uptrend channel. And you're just basically channel trading this. This is a really good channel trade stock. And I would be a buyer down here at the lower band. Next stock up is Microsoft. Inverted head and shoulder setup. basically take a head and shoulder setup, turn it upside down, and that's what you have here. Left shoulder, head, right shoulder. And here is your neckline right here. And we have broken out above that neckline. What gives me pause about Microsoft is this topping tail seen on Friday. I would be a buyer of Microsoft on a pullback to retest this support level, drawn in blue, at say 37.50. Or I would be a buyer, or I would add to my position on Microsoft on a breakout above Friday's highs, or even better, above 38.69. Volume on Friday rose, which was good. However, keep in mind, you had some sellers come in, which probably made up for the rise in volume versus prior days. In fact, we'll go to an intraday chart to check that out. Just take a look at a 15-minute chart, 10-minute chart. And here you see it. And in the final 10 minutes of trade, you had over 2 million shares net sold. So just keep that in mind. And intraday, since we're here, if we break down below 37.94 on Monday, we're coming down to 37.84 and right back into this support range, support level. Intraday, the chart is not looking too good. But that sets you up for an entry point at the support level. Next stock up is for fellow member Chris, symbol CALL, Magic Jack. Okay. Daily chart, we broke out above resistance, and more importantly, we closed there. They tried to take it higher on Friday, but it traded with the market, flashed a key reversal. So this is one that I wouldn't be a seller of just yet. However, I wouldn't be a buyer of it until we pulled back to, say, support. I'd like to see some bottoming tails at the support level. Nothing better than seeing a breakout and then a pullback. Because remember, this is pretty tough resistance to get through, and it did it. Look at how hard it was on Wednesday to get through. It pulled back to all the way down to 1850, rallied back to break above on Thursday on really good volume. So I would love to see it pull back, flash some bottoming tails, sign of support, and it confirms that this is truly support now and not resistance. And that's where I would begin to buy. I would finish my buying on a breakout above Friday's highs of $20.38. You close above there, or you look poised to close above there, you can add to your position of CALL. So ideally, pull back, hold support, buy it, finish buying on a breakout above resistance at 2038. CALL. Next stock up is for fellow member Erik, Ocwen Financial. This one was on my screener for the longest of times. It was a extreme oversold stock. I finally gave up on it going down. And you could see the bottoming tails. And so important to really respect historic support. And this is what I teach my members all the time. Where was historic support? That's where the buyers will be. And sure enough, it bottomed out last week at 33.54. Last seen back here in December of 2012. Huge selling bars. So while, yes, a very, very positive week for the stock, you still have a lot of sellers of this name. So I still wouldn't be a buyer, even though I'm a big fan of bottoming tails. I would like to see, let's go to a daily chart. And we'll come back to the weekly chart. I would like to see a pullback all the way down to 33.54, or at least a higher low, a pullback and a higher low. Now note, even though we had that bottoming tail last week, you had sellers up here as well at $39 per share. And again, historic resistance going back to April of 2013. So where would I buy this stock? Let's go back to the weekly chart. I would be a buyer on a retest of support, or I would be a buyer on a breakout above the declining downtrend line. And that's not going to happen for a while. So to me right now, there's too much risk to buy it. I would be a buyer, again, on a pullback or a breakout. Until then, I'm a watcher of it. And I certainly wouldn't short it. Next stock up for Erik is CONN, Conn's Inc., NASDAQ stock. I'm not a lover of this stock at all. It's for many, many reasons. Gap lower. You could tell right here, your maximum profit potential on this trade is probably going to be up to 38.40. I'm going to need to make a lot more than that to get involved with a stock like this. So I'm going to need to see a breakdown. And that breakdown, and what we want to do is identify where, historic support is. And I'm looking at 29.63. That's where I would get involved with the stock. Look for support down in this range, last seen in late 12, early 13. So I think we still have some downside left on CONN. Next stock up is for Victor, KNDI. I went over this one last week, I believe, and not much has changed. We still have topping tails going on here. That's a sign of resistance. Sellers above. This is a weekly chart, so it goes back a long ways. So I think that the path of least resistance right now is to the downside, possibly a retest of support. That's where I would get involved with it. I wouldn't touch this one right now, and I certainly wouldn't short it. If you got a breakout above, a close above 1539, okay, then I could see opening up a small position and seeing whether or not it has follow through. Now, taking a look at the indicators, you're putting in lower highs on the ultimate oscillator. Stoke RSI, I'm not liking it. Victor, I would really wait for a pullback on KNDI. If you have profits in it, I would consider taking some profits off the table and look for lower lows on KNDI. Let's take a look at the daily chart real quick. Yep. Putting in lower highs, I would not be a buyer of it, and I would look to start scaling out of my position. Prior high was 1539, new high is 1475, bearish day on Friday. Choppy action, Williams % jar, rolling over on MACD. This is a one that I would really, if we put in a new daily low, I would look to stop out of the trade. Okay, next stock up is EZPW. Good pullback off of resistance at $13.55. I like the fact that it's retested the lower band of the rising uptrend channel twice now, 2 days in a row. This is one that you might want to nibble on, open up a position. I wouldn't add to that position until we closed above 13.55. I like the fact that it did not pull back to an oversold condition on the Stoke RSI. Look for a possible pullback in a double bottom setup above the oversold level at 0.2. And my guess is that you'll probably see higher highs. Yeah, same thing here on Williams % jar. Possibly going to get a pullback, double bottom setup. That's a strong setup. I like those. That's a sign of strength. And you could be a buyer of EZPW. Next stock up is for John, TTS, Tile Shop Holdings. I haven't seen this one in a long time. Good rally off this double bottom setup. I would be a buyer on a close above, say, the 50-day moving average, which is now flattening out at $15.88. Then I would finish my buying on a breakout above the pivot point, which is the center of the W formation. And now we're forming the right side of the W. And here's your pivot point, the center point at $18.52. So a buyer on a close above 1588, and I would add to that position on a close above 1852. Next stock up is also for John, symbol TFM. Fresh Market Inc. I think we're coming down to the support level, John, at say 3086, which was support back in 2011. So I wouldn't be a buyer until we got a pullback to that support level. Add to my position on a breakout above the declining downtrend line. If you open up this position at 3086, use a stop loss on a closing basis just below that support level, and I would look to keep your losses small. This is a weekly chart as well, John, just so I didn't say that before. It's a weekly chart. Quickly take a look at the daily chart. Nothing exciting here. I think we head down to that 3086 level. And next stock up is INO, Inovio Biomedical Corp. It's a breakout stock. I would buy it one tick above Friday's highs of $3.24. Great volume. This is what you want to see. Strong resistance seen not just once, but multiple times over the past several months, and we broke through it and closed above it on rising up volume. That's a sign of institutional support. So one tick above Friday's highs of 324, I would be a buyer of it. Or if you get a pullback and a successful retest of support, meaning, as I mentioned this earlier as well, what was resistance should now act as support. So if we pulled back, we want to see $3 per share act as support. We want to see bottoming tails. I would be a buyer at that level, and if we broke back down below the support level, I would stop out of the trade, but only on a closing basis. It could trade down below the support level on an intraday basis, but as long as it closes above the support level, I would be a buyer of it and a holder of it. Next stock up is for Kevin, UNXL. I believe I went over this one last week. Unipixel, weekly chart, reversal last week. It closed it had some support at $10 per share. It closed a penny below it. I would be a buyer on a pullback to the 200 period moving average or the lower band of this pennant formation. And I would add to it aggressively on a breakout above and a close above this lower band of the declining downtrend channel. MACD is looking good. Looks like it's going to go positive. This is interesting. Higher lows on the ultimate oscillator. Very, very strong, very, very positive event. And we have a breakout on RSI. So UNXL is, on a price basis, not looking all that good. It did find some resistance last week. Low volume week. Let's take a look at the daily chart. You could buy it, but I would just use a stop loss order below Friday's lows because you have this bottoming tail here. That's a sign of support. So what was the low on Friday? If you want to speculate on it, this would be a speculative trade. Just keep that in mind. The weekly chart is a far more, the plan I laid out on the weekly chart is a far more risk-averse trading strategy. This is more of a higher risk. So if you wanted to buy it on Monday with a stop loss just below $9.66, I would advocate that and then add to it on a close above $10.82, which marks resistance. California Amplifiers, next stock up. This is for fellow member NETE, CAMP the symbol. NETE, this is a daily chart. You can see that we found resistance at the declining downtrend line. Keep in mind that we're putting in lower highs. I would like to see the stock pull back to the lower band of the rising uptrend channel. It can open up a position at that point or on a breakout above resistance. You have some support here at Thursday's lows of $30.75. If you're long of it right now, you may want to use that as your stop loss point and maybe look to re-enter. That's a conservative stop loss point. If you're flexible, you want to be nimble, you can allow it to pull back to the lower band of the rising uptrend channel, possibly add more to your position if it holds. If it fails and it breaks down and closes below this lower band, I would look to stop out of that trade. Stokes still look good. Volume was light on Friday, so that's a good sign. But watch out for rising down volume. Next stock up is also from NETE. This is BKYI, BioKey. Good little chart. Nice consolidation. Great bottoming tails at, say, 14 cents. We rallied. We broke above resistance at, say, 16.5 cents, 16.5 cents. And we're breaking out of a declining downtrend line. I'd be a buyer of the stock. I like it. One tick above 1844 would have me long of the stock. And I would add to the position on a breakout above 19.2. Good little chart setting up here. I don't see any real concerns either. So BKYI looks good, buddy. Next stock up was for Kate, symbol EA, Electronic Arts. It had a great rally. The thing to keep in mind is that we've broken down below this uptrend line. Now, this is a daily chart. Just because it broke an uptrend line doesn't mean you sell it. It was a parabolic uptrend, strong move. A rest is required, so no big deal. You're seeing some topping tails at resistance, last seen back in August and July. So I would be a buyer on a pullback to support at, say, 26.63, which also marks support seen back in July, August, September of 2013. And I would add to the position on a breakout and a close above, say, $28 per share. Okay, next stock up is for fellow member Chad, symbol IGT, International Game. This one I haven't even thought about in a while. All right, daily chart. We're in a triangle formation. Good bottoming tail on Friday. Good 3 days worth of strength last week. Wednesday bottoming tail. Thursday follow through. Bottoming tail on Friday. Looks like it wants to go higher. It wants to break through this upper band of the declining downtrend channel. So I would be a buyer of it as a trade on a breakout above that resistance level or on a pullback to support. Stop loss obviously just below this lower band of the rising uptrend channel. And this is a very short uptrend channel, honestly. So don't stick around too long if this one begins to break down. Let's take a look at the weekly chart, see how we're looking. Yeah, weekly chart. Well, this one's really been beaten up quite a bit. You're really going to have to keep that stop loss tight on this one, Chad. I don't want to see it break down and get away from you. I'm not a big lover of the stock and the chart. Down here, yes. Up here, not so much. I think that we're probably going to roll back over again. Just pure speculation. I'm not a lover of the stock, Chad. But again, if you're looking for it as a trade, I just want to make sure that we're clear that stop loss order just below, I would say just below 1441, and that should take you out of the stock. Ultimate oscillator looks like it wants to break out. Stokes looks like they're looping back up. So you still may get a short-term pop higher, but longer term, I think it's going to struggle. Next stock up is for Chad, SCON, Superconductor Technologies. I love the name. All right, never heard of this one. It's holding above its 50 and 200-day moving average. The 50-day just crossed above the 200-day moving average. Very bullish. So I would be a buyer of the stock in this neighborhood between the 50-day and the lower band of the rising uptrend channel. That would just be an opening position. I would keep a stop loss just below on a closing basis below the lower band. I'd be an adder to my position on a breakout above the upper band of the declining downtrend line, a sign of strength. It's a show-me stock. This is a concern. We are breaking down, making lower lows on the Stochh RSI, and we're rolling over on the slow Stochs. So keep that in mind. The indicators are not bullish. They're sending us warning flags on the stock. So, in fact, given those observations of, and the fact that on the RSI we're breaking down, I would wait for a pullback to the lower band of the rising uptrend channel. That way I keep my losses razor thin small while still taking some speculative risk. And the last stock up is for fellow member Jason, PXD. I went over this one last week. This is a daily chart. It broke out. It really wasn't able to capitalize on the breakout last week. So this is a perfect example of a stock that is breaking out of a downtrend line, above a downtrend line, and that you want to see pull back and put in some bottoming tails. What was resistance should now act as support. You saw it back here. It rallied above this resistance level, pulled back, really quick flash to bottoming tail, and then proceeded higher. I think you're going to see the same thing occur here. So that would be the game plan. I've seen this time and time again. It's the rule rather than the exception for that to happen. So I'd be a buyer of it on a pullback to this support level. And if it breaks back down to this trading range, this channel, I would avoid it because I think we'll probably come back down and retest the lower band. The volume bars are small. That keeps me happy. Stock can pull back as long as we're not seeing institutional distribution. That's fine. It's natural. Ultimate oscillator looks good. I see no other warning flags, but I think you're going to get that pullback. And that's going to be an opportunity to open up a position, Jason. And that's it, folks. If you watch this on YouTube, please subscribe to my channel. If you watch this on Twitter, follow me on Twitter. If you're watching this on the blog, please enter your email address. You'll get alerted to my member stock pick videos as well as best stock pick videos and our trade reviews of trades that we've recently closed out, whether or not we took a loss, a profit, how we traded and what was our strategy, etc. And plus you get some free trade tutorials on how we like to trade stocks. And that's it. Have a profitable trading week, folks. Be safe. The stock market is waiting for Yellen to send a signal all clear with taper. And we could quite very well see a major breakdown or breakout this coming week. It's going to be a pivotal week, so let's just stay on our toes. Talk to you soon.